Well, hello there, guys. Can y'all hear me?
Hi, yes,
Hey, how's it going, Sergey?
all good, but a little tired for today.
How's it going, Brian?
It's going good. I understand. I'm tired myself, man. I had a long night. Long night, early morning. Those combinations don't add up nicely.
No,
It's not going to get better with this time change.
I know. We lose an hour, man. When I saw the email come in, I was like, dang, is that week already? I be forgetting this March, man. Every March and every November, you have to do this, but
But
you know,
this the time like that money start rolling in though, huh?
I hope. I mean, today was a good day, but that's
today
always
was very, very good.
yeah. It finally moved after JP said what he said. He said after he testified to the Congress, next you know, the market decided to kind of move forward at least and say, all right, if the world's going to end, it's going to end. Ain't nothing you can do about that one, buddy. So yeah, we're going to have high inflation. We're going to have high interest rates. We're going to have
Unemployment rates
high
too.
unemployment coming next.
Oh.
Like it's all on the way. It's being served on play like a 5-star restaurant.
Yeah, so unemployment finally came in high.
Finally.
And then this is what I've been hitting you up every time unemployment. I'm like, Brian, why is unemployment still doing this? Why is unemployment still doing this? I'm like, it finally did it.
Yeah, bro, it finally did it today. I was happy when I saw the unemployment. I mean, I'm not happy for people losing their jobs. Let me say this, but when I saw the unemployment claims finally match what is really going on in life, that's when I was like, okay, now we're getting somewhere because it made no sense. But you got to also remember too, there's a lot of people who are not getting back into. There are a lot of people who are not getting back into the working market, right? So what they're doing is they're losing their job or whatever, and then they're leaving. They're leaving their job. Does that make sense?
Yeah.
So they leave and they're not coming back. They're not going to get a new job or anything. So that's what we call the work labor participation rate. So when that happens, we're looking to see, you know, how many people are actually participating in the market. But yeah, it's interesting times right now.
They didn't really like. I was watching a couple of videos and some of the other, or I don't know if they're economists or politicians, but they didn't really like the idea of Powell having high employment rates or announcing that. There's like a debate back and forth. I think that's why maybe it took a little while because they didn't really know what to do.
Well, I mean, think about it like this, right? He said something on the lines that the market needs to reduce, you know, people. The market needs to reduce the amount of people employed, right? And right now the rate's like 3.5. 3.5% is amazing. Let me just start with that. The unemployment rate under 5% is amazing. That's where you want to be. But if we got an unemployment rate to 2% or something like that, then there would actually be a problem because that means almost every single person is employed. There's no jobs, and that means companies, there's too much demand for jobs. So you need to soften it up a little bit. Like an apartment complex, for instance, an apartment complex never wants to be at 100% occupancy. Why would you never want to be at 100% occupancy, P Money?
I don't know why for that one.
Because if you're at 100%, that means you're not charging enough.
Oh.
So if you're at 98%, that means you're at you're at optimal occupancy. If you're at 90%, that means that your prices might be too high in the market. So you never want to be 100%. So in the same way, it works kind of like jobs, right? If companies had like a 1%, if the world was at a 1% unemployment rate, that would make it very hard for people to move up into jobs. So you want to have some softening. Well, when you say you're going from 3.5% to 4.5% on the big picture, looks great because we want the Fed's mandate is to have optimal employment. Optimal employment is considered underneath 5%. When they go over 5%, that considers a problem. When you say you're going from 3.5% to 4.5%, that it turns out to be 2 million people need to lose their job. Now imagine 2 million people losing their job in America. That's a significant number when you think about the numbers. When you read the percents, you don't really think about it so much. So that's, I mean, he wasn't trying to be, he wasn't trying to make some of his comments to be like how he was, but it just turned out that way,
Right.
So.
Yeah, it's like everyone's in a little bit of a pickle right now.
Yeah. Especially at a time where people are trying to, the savings at the beginning of the year, as Americans as a whole had about $1 trillion in savings, but they were spending $100 to $120 billion a month. What that means is by November, people should be out of savings. So you want to unemploy people at that time? Oh, by the way, we have the most credit card debt ever in history going on right now.
Yeah, that's
So people are spending it. They're swiping that card. They're buying bottles at clubs. They're going on trips they can't afford. They're buying new big screen TVs that Jeff Bezos tells them not to buy, even though he is on the board for Amazon. They're spending money without. And if they lose their job, it's going to put people into a worse place. And when people lose their job, guess what happens? Less people spend because they don't have a job. They don't have income, which hurts companies, which means companies need to go fire more people because they're not making revenue.
right.
So it's a delicate position and place to be in because we could go into recession. We are going to probably go into recession. We may not go into recession. Nobody knows the answer. Thus, you can see it in the charts. That's what the markets are doing.
So during a recession, what usually happens? Everything's more expensive, or
well, one, sucks for stock traders. For two, it doesn't suck for us. And I'll say the reason why I say that is because in Forex, you're going to see a wild swing of certain currency, right? One country goes into recession, then you look to see how the other countries, tend to correspond to that country, right? So a place like the United States, are people, buying American products or something like that.
right? I see.
So that's how it's going to work out. So we'll see wild swing, and then we'll see possibly, price come back normalized and stuff like that. I mean, you can look at the pandemic in the first 2 months. You can look at the pandemic and how it moved during there. That's a good example as well, too. So
Right. I see. Was price dumping during the pandemic? Was that what it was?
oh yeah, let me get my chart. I will show you guys. Right, let's go to daily and let's go to 2020.
Right.
Sorry for my colorful
And,
chart.
and if the US goes into recession, does that affect Canada like heavily, or
Yes, in a way. Heavily, that's to be debated. So it'll affect Canada because Canada does business with flying with it'll affect Canada in the ways that they do like business with Canada, right? So it may affect the price of goods in Canada may go down. So Canada dollar might be stronger, US CAD may go down, Canada might be able to buy stuff for cheaper, etc. It'll affect, the thing about economics is when it's all balanced, right? So the effects of one country may not directly affect another country, but it indirectly affects, and it's got to balance out. China having a recession means that goods in China might be harder to produce, which then affects Americans. Americans and Canada do business together. Russia and China do business together. Like every one of these countries balance out in a certain way. And it's just understanding like how things are related. Does that make
holy
sense?
crap, this is like a whole nother like section of stuff I gotta learn.
Yeah, it is
It's actually
fundamentals.
interesting. Yeah,
Fundamentals is a thing, brother.
It's very interesting.
Don't even worry about them fundamentals yet. Just you can be curious. I'm telling you, I don't even worry about it.
Oh yeah, no,
Technical.
for sure.
If you understand technicals and fundamentals, you will be a better trader. If you don't understand fundamentals, you can still make money using technical analysis, But I guarantee you, the best traders are the ones who know both fundamentals and technicals. But you need to spend your time first understanding technicals. I used to be a strict only fundamental trader. I never looked at a single chart, and I was making good money just in the stock market alone with that.
Right, because stock is driven by news mostly.
Yeah.
Technicals and psychology, man. Don't get faked out.
Nah. The stock market moves by fundamentals, bro.
No, but no, I'm saying the forex, technicals, and
Oh yeah. Well,
no, but everything fundamentals is dope. I would like to get in super, but first thing, technicals and psychology. Technicals and psychology. That psychology is down there the best, the main one.
yeah, no, in forex, I know very many traders they know fundamentals, and fundamentals and technicals should align once you realize that. And it depends on how you look at it. When you're more of a swing trader, you definitely have to pay more attention to fundamentals. I feel like when you're in intraday, fundamentals really messes up your day. It has the potential to mess up your day and stuff like that. So
yeah, that's why when you told me stop trading news, and you told me I should be like just very sound on my technicals. When I did that and stopped worrying about fundamentals, I honed in on my technicals, getting better in that, and my psychology. I've been doing way better in that. Like I'm gonna get back to fundamentals, but I want to hone this first, like because ever since you said that, my game plan been going crazy.
Well, there are some people with trade news and they end up getting it. Like tomorrow's NFP is probably likely to beat, which means some people are going to buy USD, and they probably, whatever the entries is they're going to buy, they'll probably be right. But overall, when you look at it on the long term, not so much.
Yeah, I'm not blowing my account. They can have that. Ever since you said, like, I really like, I love it better too, because like now if it's news at 5:30, I wake up later now and I trade after news. I don't be coming to the charts early and trying to figure it out. Like, I just do not trade news anymore, and I'm perfectly fine with that, and I'm still hitting my strides. It's just, if anything is wrong, if I mess up, it's like a little bit technical, but no, I'm cool on news.
Yeah, no. But this is what I was telling you right here. So I drew this line because I think this was the announcement on EU for the recession or a pandemic. And when we announced the shutdown right here, you notice how far it dropped. A lot of pips to be caught. Consolidation afterwards. This is technically where they say the recession ended. The recession was about 2 months long in America. So this is Euro USD, right? So let's go to USD CAD. I will take a look at that. Same time period too. Let's go to 2020. I think it was the 6th or something like that. Yeah, there we go. So the dollar was gaining against the CAD for the last couple of months, ever since we started announcing things with the pandemic. After the shutdown, it just made the CAD grow in value against the dollar. You see that? And the US recession ended somewhere about right here on the 26th, I think, of May, economists say. But you can see that ever since then, the dollar has been losing value against CAD until more recently in 2021, we're seeing the value climb back. And now we're seeing values go back to where it was before.
The 2020 was a recession? Was that the pandemic?
Yeah. March.
Time flies fast.
Yeah, brother. It's now a history lesson now.
Damn.
Yeah.
How was it trading? Because I wasn't into trading as much. I think I was studying it. I don't know if I was even in it yet. Did you guys have like a stay at home in place where you are?
Oh yeah, but I'm in Texas. So in Texas, we didn't know. First of all, Texas was on air quotes lockdown. Man, everything was open. So.
Oh yeah, not like, yeah, you guys like more Republican. Yeah, we're Democrat over here, so they shut down everything.
Oh yeah. Y'all had lockdown. I flew to LA. I was in LA in August of 2020.
Yeah.
So
I just wondered, like, if somebody, like, how was it like trading during lockdown? Must have just been making money and chilling all day.
Trade, chill, and run. I was outside, man. I'm not mean like outside. So I was like, I was running, I was exercising, cooking every day, trading on the market. Man, it was life was nice, man. I had nowhere to go. I had no FOMO for nowhere to go. Friends couldn't invite me anywhere. I was like, all I got was trade.
Right.
So
Can we go over your trades today too, please, when you have a chance?
how did I know you were going to ask? Boom, I was
You know
already
me,
ready.
I'm not playing, man. I'm trying to learn.
How did I know you were going to ask that question? Who knows? Wait, where did my trades go?
You took GU today?
No, it was EU. That's what, oh, I was like, why do I have this open? Oh, I'm on a different computer. That's why. Okay, here it goes. All right. Let me break it down from the top. So price had made its move thanks to news yesterday. Price looks like it's coming back into my H4 supply zone. So I had a directional bias of price going upwards. Then I was looking for price to move. It came out of this zone around the time early in the morning during London session, popped back into my demand zone right here. So I put all that as my demand. And then I think if I remember correctly, yeah, this trade was off of a 1 minute time frame. So price ended up giving me a chalk here.
I'm sorry. Can you go back to the 15-minute, please?
No, it wasn't. To the 15 minute?
Yeah, please, real quick.
Somebody asked a question?
Oh, no. Okay.
Oh, hey, Calvin.
Oh, the BOS was later. Oh, okay.
Yo, what's going on?
Nothing much. How's it going?
Good, man. There was an opportunity. I missed out on EU today before news. I couldn't trade because I don't trade that time period before news anymore. What was it? The unemployment claims?
Oh no, my trades were during London session. I was
I know you lucked out here.
early this morning.
Beautiful.
So price ended up making a chalk here. I'm testing out some new indicator I've gotten developed. Tried making a chalk here, came back, and then boom, price ended up taking off right here.
Wait, can you show me the chalk? Where is the chalk?
Chalk's right here.
All right. Oh.
So ended up making a chalk right here. So ended up making a chalk, price came in and touched my area, and I took my trade and took off. And that one gave me, I think, 5 hours or something. Then I also had a trade on CAD JPY. Oh, I really didn't fill out anything with this one. Directional bias was that price was coming back down. I don't know why I have it like this. Where is my stuff on CAD JPY? I've been working from another computer all day. Directional bias was price was going down. Price came into the supply zone that I found. And this was a little bit before New York Open. And then I believe this one was on 30 seconds. If I remember correctly. Yep, it was. Price comes into my zone. Let's see if this one does it right. Okay, this one did perfect. Gave me a chalk here. Price comes down to my lower low. Price gave me an entry. I took my entry and I held this trade to about 6R. So it barely touched over to the low from my trading time frame. So this was my profit target right here. And when it hit that, took profit. So yep, those were my 2 trades for today. Any questions y'all have?
Okay, I see the big M15. The bottom one, okay, that's still an M15 too, huh?
What this?
Yeah, the where you took your trade, because I see this big gray one rectangle, then you have a small gray rectangle. That's still the M15 POI, right? Right there.
This is H4.
Oh, I'm sorry, I didn't see it. H4. Okay.
Yeah, that's H4 supply zone. Prices moved a lot since then, but price was ultimately coming down. When I saw it like this is my directional bias, was that price was going downwards.
Mm. You know,
So,
it's clean.
That's such clean price action from CAD
That was clean.
JPY.
yeah, man.
And this was
JPY
in
here is
this was in
trading.
London, huh?
No, this one was 1 hour before New York open. And then news, just like Calvin mentioned, news sent it over. So I was playing with my luck today.
Yeah, news gave a gold a push too, but I'm like, yeah, I'm still not messing with it. You ain't rather, because when sometimes that thing would just rip the other way, and I'm cool on that.
It sure can.
Yeah, only if I'm in a trade, I don't mind. I'll take some profit, but I won't trade before it.
Hey, Brian.
Mhm.
So let's just say that you found like everything's in your direction, and then you found a 15-minute POI, and then you're just waiting for the retracement. And then, price comes back in, gives you the reaction, and let's just say it doesn't return to the extreme. Do you just trade like the flip zone or the continuation, or look for one?
I
Or
don't
do
do
you always
extremes.
wait?
I don't do extremes and continuations anymore. I stopped doing that last year. So my methodology on supply and demand is different than probably what you see in the course. I don't trade single candles. I don't trade single candles. If you notice, like all of my supply and demand zones are based upon what I consider called pivots or ranges. I never do single candles, so I never run into a situation of extremes or decisionals. I think it makes the trading to me a little more complicated. I also don't use supply and demand on my entry time frame.
It's just strictly price action, correct?
Strictly premium and discount. That's it.
Premium Okay, I see.
Wait, I'm sorry. So you don't use supply and demand on the 1 minute time frame?
Nope.
So, okay.
Could you go over how you would use premium and discount?
When price comes into premium or discount, that's enough for me to consider a potential trade.
Right. So that'll be on the 15M leg, and then you'll go into the 1 minute and then pull another one.
No, I'm talking about on the entry time frame. So entry for me, like 15 seconds, 30 seconds, M1, M2, M3, depends on whatever time frame I'm entering on.
Right.
So on the entry time frame, you don't use supply and demand, but you only use the equilibrium pricing. What do you use?
I just use a fib. As long as it comes back enough into at least equilibrium, it's enough for me to consider a trade.
Yeah. Lately I always use the fib. Lately it's like sometimes the fib won't. Sometimes it'll hit the fib and then it'll just go. It's like sometimes I just want to place a sell limit and just like if it hit it, it hits it. But it's like I don't know if I should do that.
I know people who do that. That's a profitable way of trading.
Yeah,
you just have to get into figuring out which ones are the right ones to take trades off of. I will never use limit orders because I don't trust price just coming into an area. That's not enough confluence for me to take a trade. But that is a style of trading that is very popular that people do. So it's something that you can definitely, but you need to test out the trade. Test it out, first. And all things I'm gonna say, always back test. Back test, see, you get comfortable. I know when to pull the trigger. You have to know when to pull the trigger for yourself. So it's always about, testing something enough where you feel confident that you're doing it and you're doing it for the right reasons. Because with everything you do, there should be a why behind it, and it should always be some rule that's tied to so that you know. But if you wanted to, for instance, set it where it comes to the fib, great. Like on this example, right? Let me see if it shows up. So pretty much from here to here, it comes to my fib. I don't take trades in the red. I take trades everywhere outside of the red. And for that, I was able to take my trade opportunity. So
Wait, in the red, they're where in the room? I see only it's prices in the orange.
yeah, I say as long as it's not in the red, I don't take trades.
Uh-huh.
I can't take trades in this red area. So,
Oh no, yeah.
so
Anywhere from equilibrium into the discount zone
yeah. So if I turned on pricing, is it
or premium.
or levels? Yeah. If I turn on levels, right, you can see that well, you can't see it because I have these hidden, but that's 40%, the red area. This 60%, and you can already see 100 up there. So yeah. So as long as it's outside the red, I can take my trade. So
Hey
Yeah, you-
Brian, oh,
Mhm.
go ahead.
go ahead, Gab.
I have a question on the EU trade.
Sure.
You remember that conversation that we had about internal and external structure on the entry time frame?
Mhm.
So for me, I mean, do you use supply and demand when you're pulling your chalks on the entry time frame?
No, I don't use supply and demand at all in entry time frame.
Okay, then. Okay, yeah. Could you go down to the 1 minute?
Mhm.
Okay, so I would have had to wait until the next high went in order for me to call that a chalk. Did I just map structure wrong?
Possibly depends on how you mapping structure, because there's so many ways you can map it. We teach pivots, we teach pullbacks. There are people who use Fibonacci for marking structure. There are people who use what's that other one? They use there's pivots. There's so many different versions of pivots. There's pit pullbacks. There is just people who eyeball structure. There's Fibonacci retracement structure, and then there's liquidity structure.
Right, but how would that high at the chalk be? How would that be structured? Because you use a 5 candle pivot, don't you?
Nope, not on this time frame.
Okay.
It's a 3-candle pivot.
Mm-hmm.
So you can see there's a substructure break and put it in a new low, and then between that
Right. This
needed a
3 candle.
high.
Got it.
And then as soon as it chalked, it allowed them to see that there's a possible early reversal.
Yep. Yep.
Hey,
Okay.
hey, Brian. When price comes into your pricing, do you just tap it, or what does it have to show you?
I have to show me the rest of my. I don't do it just on the tap. There are a couple of rules that I have to have met before I can enter in any trade. So it's not just one thing.
Oh, yeah.
It's not just one thing I look at. And
Okay,
that's what I'm saying. Basically.
And also, when it taps into your pricing, where would your stop loss be? Below that last low or below the whole fib?
Depends. I've changed. I have different rules for depending on what the market conditions are.
And most of the time, what is yours leaning towards on your trading recently? What have it been leaning towards?
Depends on it depends on the conditions, bro. Like it's not really it depends on the conditions. Conditions determine everything that I do. So there's not this is what I've seen on average.
Mhm.
Mixture. It's hard to say. Sometimes I put it behind the fib. Sometimes I put it behind wherever I have a certain criteria that I use for my entry, and I sometimes put it behind that. It just depends on like what kind of conditions I have. So if I have market conditions in which it's more dangerous for me to put it in one or the other, then I have a rule that changes it. But all that's decided by whatever I have in my rules, right?
Mhm.
So
Okay. And you also mentioned like Fibonacci structure and ways people do structure, and you also said liquidity. Can you show me something of liquidity structure?
no, I can't show you that one, unfortunately, because I don't even practice that.
Okay.
I just know people who do. Rob would be a better person to ask. That's what Rob teaches in Elite, right? That's what Elite's based upon. But the two that you will find here that I can talk to you about the most would be I can talk to you about Fibonacci. It's really I really hate that one, but you can, there's a video already in the course for pivots that I made, and you can choose whatever pivots you want. I use different pivots on different time frames, but the video you're going to see is on 5 candle pivots. You can adjust that to whatever you need to. Then there's pit pullbacks, which we already have videos in the course for. I'll show you. Give me 1 second because I forget how this one works. And let me remove all the indicators. Okay. So for Fibonacci, oh my God, this one is so hard. All right. So this would be your first spot. That'd be your second. And Fibonacci depends on the rules, but price has to come to a 50% pullback. And until it does, you don't consider that structure. So this would be the low right here. This would be the high right here. And so then let me go to the replay real quick. So I'm gonna go here. All right. So right now, that's your low, that's your high. So now what we're waiting for is waiting for price to come from this to make a point. And there's still like a pivot in between. So hold on a second. Here's the line for that. Okay, make it darker. Black. That's fine. All right. So price keeps going down. So this is now the lowest point right here, but it has to make a 50% pullback. And it doesn't. So you keep pulling your fib out until it makes a 50% pullback from the lowest point. So we have to keep pulling the fib like this.
And they don't want to come back.
Yeah, it probably won't. It's not gonna come back for a while. So as it keeps going, now the pullback has to come to, it becomes larger and larger. Okay, I think this may be the part where we get the pullback. Please don't go lower. Please go higher. Yeah, I hate this one. When I learned this, I was like, hell no, I'm not doing this. Okay. So
I mean,
that was
smaller time frames.
all right, cool. So it made at least a 50% pullback. So now this is now considered your lower low point. So now this is these are your market structure ranges.
Oh.
So yeah, I don't like this one. It feels more subjective to me. So now it'd have to break. Now the market is unconfirmed bearish, and it has to break this in order for it to be considered bullish, which it hasn't. So you would have a bias that US CAD is bearish, right? So that's how that one works.
And that one was called what?
Fibonacci based market structure.
Oh, yeah.
Yeah. I mean, structure is structure, right? Whatever you do for your rules, that's all that matters. That's what's most important. So like how you pull structure just needs to be consistent. You just need a consistent method that you do. That's ultimately what's going to be more important. So,
Hey, Brian, do you have any tips for, so you know how like sometimes if you're not zoomed out far enough, like if you don't start far back enough when you're doing pivots, that you can like kind of get caught up and mark structure wrong, like because there might be like a range, like a big range on the left side of the screen. Are there any tips for when like you're doing that, like where to just start and you don't have to worry about it? Because if you start in the right spot, you should ultimately like be able to map it right. But when I'm back testing, sometimes it's just like I find myself having to go way back to get it right. Is there any like tips, or is it just that's the way it is?
that's just the way it is. I mean,
Okay.
I don't have to look at structure anymore because I had an indicator developed based on my rules for structure. And I trust that to be 99% accurate, right? There's the times where it's going to make things like I just saw earlier in the call where it's not right, but my eyes will see that more likely than anything. But there are times where, you're eventually just going to be wrong. Like you have to pick a starting point, but that's the benefit of taking everything you do in trading. If you want to follow an objective method, should be to the point where you can automate it. If it's objective, you can automate it. If it's subjective, you can't. So I don't think about pivots anymore. I know how to pull structure. I can do it. I don't need the indicators that I use, right? But I use them because it reduces my margin for error, because they're supposed to be like over 95, 99% accurate for me. So if you're going to do it by hand, it's going to take longer. But that's why we provide like indicators and such as part of the community, so that you don't have to do things that, for instance, could speed up your trading. That's how I can look at 6 or 7 pairs in the morning and look at the market, because the indicator is going to draw out market structure. All I have to do is attune my eyes to it, right? But if I had to do this all by hand, I would watch 1, maybe 2 pairs max. But I used to have to do that before I had everything developed, and it took me so much time to do market structure. And you're right, you do have to go back. So that's just one of the downsides of doing it in manual. Like I see people talking all the time about, if you're a real trader, you don't use indicators. No, maybe not the ones that, are all across the internet, right? But
Yeah.
if you custom build things that can help automate the things you already do that are based on price action, why would you not use that if it's going to help you to have more winning trades and less losses, or spend less time making errors? So it's just one of the things you have to be patient with, right? But yeah, it's going to be work. And there's not really an easy way around it. You just have to pick a point. Like for me, this is a clear high, right? This is a clear high. Somewhere over here, this is a clear low. These would be good starting points. Does that make sense? Whereas I wouldn't start somewhere like right in here. Does that make sense?
Yeah, it makes sense.
So the easiest tip I can say is find the most clear point where if you look left and right, it's clear that this is a low point. It's clear that this is a high point, and then start your markups there. But if you can, utilize our indicators as much as you can, because it will help you. I know there's some places where we don't have it available for us, right? But as much as you can, like another thing you could do, use our indicators on TradingView. And if you're using like MT4, then now you have a good starting point. Makes sense?
Yep, totally.
Hey,
Awesome.
Calvin, for the pivots, it's like a full system, and Brian has a video on it, and yeah, you can look to the left and find the lowest and highest points. But when I back test, especially on the 4-hour, the intraday hard time frame, I just look for the first step in what the system is, and then I'll just keep following off of that. Like let's just say, for example, in order before a 5 candle pivot, you have to look for a break of structure. So I'll literally just like on the 4-hour look for a break of structure, the most recent one, and then I'll look for my next candle pivot, and then that'll be my swing structure. And I'll just keep going back and forth until I notice that all the swing points I'm marking are reacting off of each other.
Yeah,
That's one thing that helped.
became accustomed to it and back testing for the 4-hour, but sometimes when it gets down to 1 minute, like it's just a lot. You know what I mean?
It's a tedious process.
Yeah, right, exactly.
Yep. But I'm gonna say this and leave this with y'all guys. Automate the important. So whatever you feel like is like an important task that you do in your trading, if you can find a way to automate it, it saves you so much time. Like the most important indicator that I have is market structure, period. If we don't get direction right, and you make mistakes. So but when you automate those things, it's easy to build things that you have objective rules with, and that's the most important thing. So you want to automate those things so that you don't have to spend time doing it. But definitely, like I said, utilize our indicators with the stuff that we provide, because that will help, and that's one of the benefits of being part of the community. So definitely want you to utilize the resources that are given to you. I know some people think no indicators, no indicators. Man, if that means I'm gonna save time and money, I'm gonna do it every single time. So with that, guys, I wish y'all a great week.